Welcome back, people. Let's get into it. Okay, so the S&P and the triple Qs printed new all-time highs today after a minor pullback yesterday. We've got buyer's exhaustion on the Dow Jones and the Russell after record highs last Friday, but the Russell recovered most of its losses today. I will be watching just one ticker for the rest of the week for a momentum continuation play, so stick with me. Plus, September, the FOMC meeting minutes landed today, and Jerome Powell will speak tomorrow, so that definitely gets the tape moving. All right, this will be a quick market breakdown. No fluff, just what happened. Today's tape showed a major comeback for 3 out of 4 major indices. The S&P got up 0.59%. Triple Qs up a whopping 1.15%. The IWM closed around $246.50, up just above 1%. And the Dow Jones just kept doing what it was doing for the past 2 days. And it ended around $466, losing 0.3%, nothing major. The VIX is down 2.2% so far this week, and it closed under 16.50. The 10-year yield maintained those past 3 days average at 4.12%. Next, what moved the markets? We have 3 factors, again. 1. Profit-taking on Tuesday after a run to all-time highs last Friday. Sellers taking chips off the table, but came back roaring today to new all-time highs. 2. The AMD-OpenAI multi-gigawatt partnership announced on Monday that re-rated the semiconductor group. 3. Geopolitical and U.S. government shutdown headlines pushed flows into safe havens. Gold surged, again, and is up 4% during these 3 trading days. So gold rallied to record levels again, $4,059, and Bitcoin is going strong. When gold and Bitcoin both climb, it is obvious that big capital is reallocating, which changes sector flows. Resources and safe haven sectors can trade independently of the equity narrative for a short window at odd times. Side note, U.S. trade balance for August showed a large deficit. Some figures were delayed though. This is definitely not the headline for today, but it's a growth signal, and President Trump watches it. Today's headlines were the FOMC minutes from the September meeting. This was the highest probability mover on the calendar. Traders always parsed the minutes for timing on rate cuts and the Fed's tone, which basically was that the Fed officials were strongly inclined to cut rates, with the only dispute being how many cuts were coming, I think possibly 2 more, provided incoming data, especially on labor and inflation, supports them. So basically nothing new. Markets anticipated what was in those minutes, so they kept trekking higher. It is worth mentioning, though, that there was notable internal dissent. One governor, Stephen Miran, voted in favor of a larger 50 basis points cut, but I don't think that will happen, at least for now. Alright, so before we get to the one ticker I'm watching with you guys this week, I want to give you quick updates on my last trades I called in my previous video from Monday. First off, WDC. I entered at $125 as a momentum idea, but price lost intraday support. Stop loss hit at $123. Result: small loss. My thesis was invalidated. Now I'm sidelined until structure confirms. My other play was Coinbase. I entered on a pullback like I wanted to. My entry was at $370 yesterday. My stop loss at $367 also was triggered for another small loss. But then price reclaimed $370 and crossed back above the 9 EMA with confirmation. So I re-entered. Currently green and holding. This was a textbook re-entry after a failed breakout to the downside. Protection first, then patience. Lesson here: stops are tuition, re-entries are earned. It's a process. Now the one ticker I'm watching is AMD. I think that's obvious, but you have to be careful. This is the tape's current headline hog. The monster AMD-OpenAI deal announced on Monday is still shaking up the AI sector. That AI news repriced semiconductors overnight. The catalyst is a multi-gigawatt AI infrastructure partnership with OpenAI. That's not marketing. That's structural demand for data center GPUs. Think of AMD as selling the highways on which AI traffic will ride for years. And analyst reactions were loud. Jefferies upgraded AMD to a buy with a $300 target. Rosenblatt raised their target price to $250, and volume exploded on the gap up. That's institutional bets showing up in the quotes. I don't know about you, but I'm following them. I'm entering on a pullback around $225 as a strong psychological level. Since it is now trading on a higher plateau, I will only enter if I see price absorption around that level, If it cuts through $225, I wait until it gets to $200 and take it for a continuation long, riding the upwards momentum. Do not chase. This is not financial advice. This is the setup I'm watching, not a recommendation. If you are new to trading, or maybe you're not new, but you are not implementing risk management practices, write these down quickly. Risk rule number 1, 1% to 2% max risk per trade. If your account is $100,000, your max loss per trade should be $1,000. That's not a suggestion. It's survival math. If you have $5,000, your max loss should be $50. It is what it is. Process. Plan size, plan exit, execute both. If you decide your stop after you're in, you just bought the problem. Predefine position size and stop. That's mechanical discipline. Use mechanical tools, stop orders, option max loss definitions, or preset exit alerts for options traders. Define the maximum percentage you will lose on the contract and blot that out of your mind. If that number hits, accept it and move on. Emotional discipline beats raw conviction every time. Think of red days as feedback, not as judgment. A red day is a teacher, not a villain. So review, adjust, and don't revenge trade. Don't overload correlated bets. If you have 3 AI names long, that's concentration risk. Define maximum exposure to a theme and treat it like a sector limit in a fund. Capital preservation is the trade that underwrites every other trade. Win the right to trade tomorrow before you gamble for a win today. Quick recap in 30 seconds. Theme markets kept pushing to new all-time highs. AMD's OpenAI deal re-rated the AI semiconductor space. Safe haven flows lifted gold. Trades WDC got stopped out. Hit at $123. Coinbase also got stopped out. But then I re-entered at $370 after 9 EMA cross and volume confirmation. And I am watching AMD for continuation. That's the market midweek breakdown. Keep stops real, keep size sensible, and treat risk like oxygen. You don't notice it until it's gone. Trade smart. If you reached this far, don't forget to hit that like, subscribe, and share your thoughts with me in the comments. Until next time.